one of the biggest ones that a IRS is going to look at, or the state for that matter, if they were to come in and do some sort of an audit, is they're going to say, okay, let me see your business checking account. And you're like, well, what do you mean, my business checking account? When I have money, I just put it in my regular checking account. Aha. Well, is that normal business operations, or is it a hobby? Is the bank account that you put the money into, do you expect it to grow over time? Do you expect to make more profit over time? Or am I producing something that could appreciate over time? There's a 9-step test. So the first one is that you must treat the business like a business. But if I wanted to do something once or twice a month, kind of for fun, and I enjoy doing it, but I created this big tax loss to do it, that's a problem.
Welcome to another edition of the Financial Puzzle Playbook with your host, Jim Sumpter. I'm RJ Malik, producer of this podcast. And Jim, how are you doing?
RJ, I'm doing great.
Excellent. And we are now going to continue our discussion with the 6 puzzle pieces. What piece of the puzzle are you going to be discussing on this podcast?
So, RJ, we're going to talk about, we've got these 6 pieces, and we haven't really touched on income tax a whole lot. Today, we're going to talk about income tax, and we're going to talk about something that is that probably every listener has had at least go through their mind at some point, and that is, if I do X, can I count my expenses? Is that a business, or is it a hobby? So what we're going to talk about today is it a business or is it a hobby? And let's sort of jump into this. So the IRS defines a business as an activity entered into with the objective of maintaining a profit, making money, okay?
Yes.
The IRS views a hobby as an activity that is not engaged in making a profit.
Yes.
Okay.
Yes.
Now, does that mean that everything that we do that does not make a profit automatically count as a hobby? And the answer is no. I'm going to give you a very general rule, and that is if the activity is profitable 3 out of 5 years, then by code, it is considered a business. It is the IRS's obligation to prove you otherwise if you make a profit 3 out of 5 years. However, let's say that you lose money 3 out of 5 years. The IRS will deem that as a hobby. It is your obligation to prove them otherwise. Okay. So that is the general rule. And, the whole concept of this is, I do an activity. Let's say that I am in woodworking, and I'm doing woodworking, and so I'm enjoying woodworking, and I have fun with woodworking. It's cathartic for me. I can have time to do it, and I have some cost. I have some wood and the glue and the nails and my materials, my saws and my jigsaws and all this kind of stuff. But is it a hobby or is it a business? And this is, an example of where we're going to kind of get into this. And so let's go back to my example of the woodworking. And it basically says, if I sell my things that I make, and that's income that comes in. And I have, the desire to make a profit on this, then it could be deemed a business. But if I have this income coming in and then I have all these expenses, and at the end of the day I have a loss, if I do that 3 out of 5 years, the IRS says it's a hobby. Okay, and those are under, I don't talk a lot about tax code sections, but that's under section 162 is the general sense of where all of these rules fall. So let's kind of talk about this now. Now, RJ, you and I were talking a little bit before this episode. You do some things where you voice over some books and radio and things like that. So tell me about that. What do you do, and is yours a hobby or a business? And has your advisor ever warned you, and I'm putting that in air quotes,
Yes.
about what we're talking about here?
Yes, he has warned me about the fact that I need to make sure that I'm making a profit 3 years in a row. Or if I don't make a profit 3 years in a row, then it will be deemed and classified as a hobby, and I lose all sorts of benefits. I've been doing this for probably about 8 or 9 years now, and it's inconsistent, but now it's the last couple of years have been more consistent. But it's something that when I had a full-time job, putting effort into it was hit or miss because I'm going to make sure I'm concentrating on my full-time job. Now that I'm focusing on this, my full-time job, which is voiceover work or anything audio, anything that has to do with audio, not only just recording commercials, but I can edit any type of audio and things that, again, that do with audio. This is something I'm really focusing on, and I have had several discussions with my financial advisor / accountant, and we have to stay on top of this because it can blow up in my face very quickly.
It really can, because what happens here's what happens if the IRS deems something as a hobby as opposed to a business. You still are required to count all the income, but what you don't get to do is count all the expenses. And you certainly can't create a loss. So let's kind of get into this. There's really a 9-factor test that the IRS looks at. Now, keep
Okay.
in mind what I said a minute ago. If you're profitable 3 out of 5 years, it's the IRS's obligation to prove you wrong. If you're negative 3 out of 5 years, it's your obligation to prove you right. Okay? There's a 9-step test. So the first one is that you must treat the business like a business. In other words, the operations, the record keeping, making changes to improve profitability, these are all really, really important. One of the biggest ones that the IRS is going to look at, or the state for that matter, if they were to come in and do some sort of an audit, is they're going to say, okay, let me see your business checking account. And you're like, well, what do you mean, my business checking account? When I have money, I just put it in my regular checking account. Aha. Well, is that normal business operations, or is it a hobby? And so it's really important, if you're going to have a business, you need to treat it like a business from day one. And that means get a separate checking account. Keep your books and records separate. Really, really important. The second one, and you touched on this a second ago, is expertise. What is your field of study? Have you consulted with experts in some sort of, manner? For example, you mentioned that you've done radio and voiceover for a long time. Okay, that is your expertise. That is your field of study. Let me go back to my woodworking example. If I am doing that sort of as a quote unquote hobby on the side, but then I decide to sell some things and I want to call it a business, but my field of study was financial planning,
Right.
does that mean that I can't use the woodworking as a business? And that answer is no. Yeah, I can use it. It's just not my expertise. Now, if I have a subscription to certain magazines, certain models that I follow, certain shows that I watch, that I can show some consistency on that, then I'm quote unquote consulting with experts in that manner. So that's one of the things that I could deem. But none of these automatically exclude you. It's the combination of all of them that is the test. So that's the second one. The third one is time and effort. How much time and effort am I putting into said business? In other words, is this just for recreation? I'll use an example of, I have a really nice camera and I like taking pictures of outdoors. Does that make me a photographer? Well, no, but it could be yes. But what if I all of a sudden become a wedding photographer? then am I devoting time and effort specifically for that task? Am I booked out a few months, into the end of the year to do these certain sorts of, activities? Or do I, if somebody calls me on a Friday and says, hey, you want to go shoot some pictures on Saturday or Sunday, am I doing it that way? In other words, is this just for recreation, or is it a business? The fourth one, and this is kind of an interesting one, is there an expectation that the assets used in the activity may appreciate? In other words, like, let's say we use my camera, for example, because, there's a lot of camera equipment, and I know you've got audio equipment that was not cheap, and by any means.
Right.
But that's not really an appreciating asset.
No,
A microphone today, 5 years from now, isn't going to be worth more than when you bought it. But is the bank account that you put the money into, do you expect it to grow over time? Do you expect to make more profit over time? Or am I producing something that could appreciate over time? And so this is one that not everybody falls into, but you sort of have to look at and see kind of how would this, fit into the broad scheme of things. Remember, I said there's none of these rules that by themselves are the rule. It's the culmination and the combination of the whole that makes this a hobby versus a business. Have you had success in carrying on similar activities? Now, RJ, this is exactly your situation. You were in radio working for, corporations for years. Today, you're more of a, what I would call, freelancer.
Correct.
Where, you're my producer on this podcast. You produce some other people that do podcasts. You do voiceover. You do reading books and audio books and all that. So all of these things that you do still have to do with radio. And that is, you've had success in carrying on a similar activity. So you absolutely would fit under this one criteria right here. Now, do you have an expertise in converting an activity from being unprofitable, making some changes and adjustments to where you're making it profitable? And I think, if you look at your set of circumstances and you say, wow, okay, those three things did not work, so I won't do those again. I'm going to make adjustments, and now I'm going to do these again.
Right.
So, for example, in the photography, I'll go back to that example. If you do the photography, but you had shutter speeds very different in one set of shoot, and now all of a sudden you've made the adjustments, you've made the notes, and now you adjust them to you're trying to make it more profitable, or you say, wow, that lighting wasn't good, so I'm going to go do this and improve the lighting. Those are adjustments that you could make that could make something be from unprofitable to profitable.
Sure.
Okay, so those are the first five. Let's talk about the next four. Is there a history of income and losses with respect to the activity? In other words, are we doing the same thing over and over and over, expecting a different result? That's the definition of insanity,
Right.
if I remember it.
Yes.
where you're truly doing the same thing over and over and over, but you expect it to be different this time. Okay. Are we making adjustments? Is there a history of income and losses with respect to that activity in not only my business, but in other people? Have other people been able to do this and make it work? Number 7, the amount of occasional profits which are earned, are they substantial relative to your whole income? So RJ, I'm going to give you an example, and I'm going to go back to something that you said. When you were working for the corporation and you were in radio every day on the air at the same time, okay, and then you came home at night and you said, okay, I need to voice over this audio book, but you do that at night away from your substantial income, would that still count? And the answer would be yes. But if you said, okay, once a month, I'm going to do a little reading here and I'm going to record it, and I may or may not sell something. And if I do, I'm going to put it in my personal checking account. But I'm going to go ahead and depreciate all these thousands of dollars worth of equipment.
Right. Yeah.
You're going to show a loss, and that may not work. Okay.
Yeah.
Because it's not a portion of your substantial income.
Sure.
So sometimes having a substantial income and then this supplemental is good on the side. And I'll give you a great example. I'm a financial planner, and I have my general income is from financial planning, income tax planning, estate planning, things like that. I also teach as an adjunct professor, income tax courses, okay, which I am compensated on a 1099, not a W-2, okay? So is that a business or is that a hobby? And I would argue that it is a business because it is different than my substantial portion of my income. That's what this rule number 7 really gets down to. What is the financial status? And this is where a lot of people get themselves in trouble. And I'm going to go back to I have a client that wanted to get into these essential oils. Okay, so I'm gonna pick on the essential oil, the Avon, the Mary Kay, the Amway people. I'm picking on all of these in this sense. Okay, you had substantial income from other sources. Well, we just talked about substantial income was good, but then we have this what I'm going to call a side gig over here that creates a tax loss that is different than maybe my normal substantial income. It doesn't mean that that's always a bad thing, because if I wanted to be a wedding photographer on the weekends, I've already laid out all the ways that I could do that and call that a business. But if I wanted to do something once or twice a month, kind of for fun, and I enjoyed doing it, but I created this big tax loss to do it, that's a problem. And that's where IRS kind of comes in and looks at these sorts of things. The last one, and rule number 9, is personal pleasure or recreation. Now, this does not mean that if you enjoy doing something, it is automatically counted as a hobby.
Right.
Okay? It also doesn't mean that if you don't enjoy doing it, it is automatically counted as a business. Okay? Here's where the problem comes in. I had a client one time who was an artist. Okay? She's a fabulous artist. She enjoyed traveling. And so what she would do is she would go and she would travel to these places, and she would go to all these museums and these exhibits and all of the things, because it helped her to create new art. And while I get all of that, what we couldn't do is count all of the airline tickets, all of the food, all of the tickets to the admission, all of the everything that she was trying to count. I'm like, whoa, let's slow down a little bit. You can count some of that, but where you really can get yourself into trouble is when you try to create this big loss because of all of these expenses.
Right.
And that's what IRS is looking for.
Hi everyone, I'm Cassidy, the second C in CMC Financial. So Dad sometimes gets on a roll with this podcast and might forget to remind you about a few things. 1, don't forget to like and share this podcast and leave a review. 2, follow CMC Financial on all of the socials, Facebook, Instagram, and LinkedIn. And 3, go check out the website at cmcfp.com. Okay, back to my dad. He's probably still talking.
So RJ, that's where you can really get yourself into big trouble, with all of these different rules.
That makes sense, that you have to really be careful. What I was going to say is, yeah, you can write off some expenses, but when you start getting into food and things like that, you got to be really careful Now, if you're entertaining a client, that's one thing. But if to go with your example, if you're visiting a museum and you decide to try to write off lunch, even though you're not really meeting anybody, I think to me, that's a little iffy.
It definitely could be. You know, there's some rules around that, and we'll probably, you brought up a great point. We'll probably do an entire podcast on business expenses at some point. Heck, we could even break it down to the minute and do one on travel business expenses.
Yeah.
I literally could do an entire podcast on that whole thing because there are ways. So, for example, I was out of town last week and I was traveling. I was traveling for work, for business. I had very specific business meetings. So my travel counted. The meals that I had away from work, because I was more than 50 miles, they counted. And so there was a very specific set of rules. Now, what I couldn't do is go have a filet and lobster each night and count that. But if I wanted to go and have a turkey BLT sandwich and some fries, sure, I can count that because I'm away from my tax home.
I got a question then.
Uh-huh.
I occasionally drive down and visit my mom in Florida. I'm in New Jersey, and I drive down and visit her, and I stay there a couple weeks. She's by herself. She's 87, so we don't like the fact that she's alone. So I go down and I work from her place for 2 weeks, doing my voiceover work and things like that. Can I write off, because I'm driving down, can I write off my travel and my hotel stay, because I have to stay in the hotel one night?
So let me ask you, when you go down there, I'm going to be careful how I ask this question.
Sure.
When you go down there, are you going to meet any specific clients while you're down there, or you're just working away from your home?
I'm working away from my home.
Yeah. So then the answer to your question is going to be no, you couldn't.
Okay.
Because you're not going to meet prospects, clients, things like that. Now, if you went down there, let's say that, for example, she lived in Birmingham, okay? And you were going to Birmingham. Yes, you were going to see your mom, but the intent of the trip was to meet me, some other people that you do production work for, and things like that. But while you're down here, you saw your mom, okay? If the meetings for business are the majority of the days, let's say you were going to be gone 5 days, and 3 of the 5 days you had meetings, and 2 of the 5 days you were meeting mom, then what you could do is you could count 3 of the travel, 3 of the hotel days, 3 of the days of meals, 3 of the days that you had meetings, and then the days that you met with mom, those will be pleasure. Okay. Now, let's say it's just exactly the opposite. You're gone for 5 days. You have meetings 2 of the days, but you're with mom 3. Now you're not a majority. The days that you are having meetings, you could count, but you would not be able to count your travel to and from, because the purpose of the trip was pleasure rather than business. Does that make sense?
Yeah, makes 100% sense.
And so that's the answer. But yeah, if you're going to travel to another location, now what it does do is, because you were technically working in Florida, maybe Florida's a bad example because they don't have a state income tax.
Right.
You would not be required to pay state income tax in Florida, or let's say you were in Alabama where they do have a state income tax. You would not be required to pay Alabama tax because you were not there a majority of the time and you did not have an intent of staying. So your tax home is still New Jersey, and so not the other states. So very long-winded answer to your question, but it goes to kind of show my whole point. There's not just a cut and dry answer in anything that has to do with tax law, especially when it has to do with this notion of being able to count business expenses, which is the whole point of, is it a business or is it a hobby? Because remember what I said in the beginning, you have to count the income. The question is, can you deduct the expenses? that's sort of the bottom line, and that's what I wanted to cover in this episode.
Well, it was very informative and helpful for me because I did have questions, and you did actually clarify a number of things. And I know my financial advisor has also told me, and you sort of, I guess the word is, I'm searching for
Confirmed, maybe?
Confirmed, yes, yeah, that's the word. Confirmed what he's been telling me, which is good. So
Right.
I'm happy with that. But yeah, lots of great information.
Yeah, that's great. That's great. Well, as always, if somebody has more questions about this, the best way to find out more information, if they wanted to contact us is, our website has a great amount of resources on there, and that's cmcfp.com. My direct number is 205-510-9074. Or we're on all the social medias, Facebook, LinkedIn, Instagram, and also our YouTube channel. So, yeah.
That sounds good. All right, Jim, appreciate that. And most importantly, thank you for listening to the Financial Puzzle Playbook podcast. We ask you to share this podcast, rate it, and leave a review because this actually helps others find the show. Again, thank you for listening. And for everyone at Financial Puzzle Playbook, I'm RJ Malik, and we'll see you at the next podcast.